Welcome back. You're watching Crystal Ball. I've been in conversation with Krishna Kumar, Portfolio Manager and Investment Director at EASTSPRING Investments. What is a more realistic earnings growth expectation then, Krishna? After having seen how the year has started off, if you're not sure about 20% and if you had to stick your neck out and put your pin on a number, what would you say is more deliverable?
There are two parts to it. First is the overall economy recovering, and second bit is how do the corporates respond to this economic recovery. Give or take a number, I mean, it doesn't matter. I mean, I can stick my neck out, but if I don't tell you, I won't be wrong. So that's the only way I will avoid that number question. The way to answer it is to think about economic recovery and where is it coming from. It has to be capex led, and that's what you've got to think about. And obviously, we've spoken about financial, which is a serious chunk in the market, which is not very helpful. So the other bits have to be from here, and it's not impossible to kind of get to a number where you will say that this is more realistic, and given that it is less than 20 or possibly could be less than 20 if the capex cycle doesn't pick up quick enough, the market will look stretched.
The other part is IT, which we have not spoken about, and I know that you own many of the top IT names in your portfolio. Are you disappointed with the communication that came out from Infosys and some of the larger players, suggesting that growth will not be as robust as the market might have thought earlier?
So I don't fault them too much for a variety of reasons. I mean, the reasons being ranging from the cross-border issues that one has heard, partly political, which are kind of happening across the regions. The second bit is I'm not very sure whether the companies are capable of honestly grappling with the way the world is behaving. If we actually sometimes assign too much to their ability to understand and also communicate eloquently in terms of what's going on, what they see. So it's a very tricky world. I mean, the way the currencies are behaving, way the banks are trading. So the important point is imagine that a good part of the IT companies have a large share from BFSI. And BFSI is a key component for, all these Indian IT companies. BFSI globally, I mean, take US, take Europe, take Asia, wherever you want to be. That's the soft piece in the puzzle globally. And when I say soft piece in the puzzle is, think about Bank of America, think about Deutsche Bank, the European banks, the American banks. They are struggling to figure out what the next few days are going to be, and they obviously will find it extremely difficult to tell their vendors as to what they need to be prepared for. So I'm sympathetic about what the IT companies say, and the management commentary is to be kind of be more. We need to be more considerate towards them because they themselves are grappling with a lot of issues.
Do you have a view on the commodity space, Krishna, on the material space? Because that's not only a sizable chunk, or in terms of the delta, an increasingly important chunk in terms of determining earnings for us, but also it sort of underscores the risk-on, risk-off mood in global markets. What's your sense of how the next 6 months could be for the whole commodity space?
So I don't have a very strong view, but I think the way the liquidity has been bobbing around and the way liquidity has been chasing assets which are worth investing in, there are two parts to the story. First is the currency, second is fixed income. The currency part is like anybody's guess because everybody wants to be lower than the other. The fixed income is possibly all consumed, and the yields are now being chased down to zero. The assets that are left, which are where liquidity could actually go and possibly kind of see a fair amount of chase, is commodities. And the fact that these are the assets which are trading at possibly 6-7 year lows, and some of them are life lows. So those commodities will offer some value, and the fact that if the Chinese policies are favorable, there are a few things which can kind of trigger a fair bit of optimism from the Chinese outlook. They have managed to pull down a few, managed to curb production, managed to kind of removed some assets, and they have rationalized a fair bit of their capacities. And secondly, I think their rate action will possibly trigger a bit of capex as well. I will possibly watch out for the commodity space, which is still relatively a low-key asset class as we see it now.
What do you make of some of these local triggers which seem to be driving sentiment back home, which is the passage of GST or the monsoon? Do you think they're priced in, A, and B, do you see them as very material, fundamental triggers in the near term?
So, with the risk of sounding a bit cynical, I mean, this GST bill and the GST changes which are being talked about, we've seen several bull phases and rallies on the back of GST rumors. I think the reality is it will be done only when it is done. Even if it is passed as a bill, it has got several follow-through measures which need to be taken. And it is not going to be before middle of next year that you will see things actually fall in place. There are a couple of concerns on the back of GST which I think people are still possibly, I mean, we all are a little blind about, is the impact on inflation. And the neutral rate, how neutral is neutral, and also how do you distinguish between goods and services. So there is a whole lot of issues there. So GST, sentimentally, because we all kind of do not understand the totality as to when it comes to existence, what the impact is, it's a positive sentiment driver, but the outcomes might be very different from the sentiments. The second part is monsoon. I think monsoon is important. Obviously, it kind of is a key driver. These are positive triggers. I think what is more important is some of the initiatives that I see power and road sector which have taken up. Those are positive moves. So the policy action and the ministerial moves are a little more significant than to talk about, key events. So structurally, things need to be done rather than looking for, a few rockets here and there.
You're sounding a bit cautious, Krishna. Would it be fair on my part to suggest that you are not completely confident that we are on a multi-year uptrend or a bull market at this point in time, that you're prepared that given the global backdrop, things could change anytime?
So I'm mindful of the risks, okay? So with the risk of, you having understood the way you have, that I am not bullish, is possibly may not be accurate. I would sum up by saying that I feel that the policy actions are positive. I think the efforts in terms of corrective measures and structural changes are positive. The global backdrop is obviously not conducive. The third bit or last bit is if the banking system was a little more robust and it had the capability of pushing more than 8% credit into the system, your GDP growth and overall structural growth would have been much stronger. It is important to understand that you can't blow bubbles and you can't call it growth. And the fact that you need credit to support it, your banking system, 60-65% of the banking system is reasonably crippled. That needs to be fixed first. If you have credit supply, you must assume that it is going to be for the right reasons. If you do not have credit supply, it is very difficult to kind of have a robust 8-9% growth in the economy. I'm completely mindful that these are being fixed. I'm appreciative of the fact that, albeit slowly, but it is being done. The fact remains that these things are not fixed in a quarter. I am cautious to the extent that the valuation does not permit any margin, or there is no risk for error. I mean, there is no room for error. And that's what is making me a little less, buoyant, or, you could call it a multi-year rally. I mean, it could be a multi-year. I don't know about it. But as I see it as a static picture, as we stand here and talk today, it is valuing a fair bit of the optimism. And we need to be mindful that the world around you is not the best place to be.
Krishna, always a pleasure talking to you. Thank you very much for your time today.
Pleasure is mine. Thank you.